Sandhar Technologies, which will be starting. So let's talk about the company, more about the financials, what is the way forward. I have with me Mr. Arvind Joshi, Director and CFO of Sandhar Technologies. Arvind, I'm going to start with a very basic question. In simple terms, how would you describe your company?
Our company is a customer-centric auto component player.
Okay.
We are largely focused into the vehicular safety and security segments, sub-segment of the mobility part. We have played on the diversification theme, be diversification in terms of product, geography, business segment, customers, or the technology platforms which are being used. We have tried to build up our business based on the fact that each of the customers provide you a huge amount of opportunity the moment you come on to the diversification theme. We get integrated into the OEM strategy because the OEMs typically...
Who are your top 3 clients?
We have Hero MotoCorp as the topmost one. 28% of our revenue comes in from Hero, then followed by TVS Motors, then followed by Royal Enfield, Honda Cars. We have JCB coming up in a big way. Then we have some of the big tier 1, global tier 1s in terms of TRW, Bosch and Autoliv.
Okay, if my understanding of your RHP is correct, there's a lot of debt on your balance sheet, and the purpose of this issue is essentially to retire debt. 75–80% of the proceeds would be used for retiring debt.
Right.
Now, you could have raised capital from banks, you could have done something else to retire the debt, and your debt is also not that bad. So why go public, take money and retire debt? Because ultimately, when you are raising equity, it will come at a cost.
Yeah.
And raising equity and retiring debt, historically, we've seen is not the best and the cheapest option.
So, I'll try to answer this in a different manner. We were always a debt-free company till 2005-06. Why has the debt come into being? Well, I would say we are currently at debt equity of 1.5 times. Not very high. However, a significant portion of the debt comes in from our overseas operation, where the working capital portion is also there. We have invested almost about 640 crores in the last 6 years to build up our business for the next level of growth. We have been self-sustaining in terms of our requirement. The debt which has come up is also on account of the fact that we have had to establish several units at the behest of the customers. And when we are a customer-centric company, it's very important for us to meet to the customer's expectation. This has helped us in terms of growing our businesses significantly and deepening our reach with a particular customer. So our strategy of acquiring a customer, increasing our revenue per wallet share with each of the customer, increasing the content per vehicle, bringing in better quality products to them, bringing in higher margin proprietary products which are more onto the technology side. This has actually helped us in terms of cross-subsidizing our initial requirements of setting up a unit. So to answer that, I would say that we are not at that particular debt level. However, we believe that this is the right time for us to move into the capital market, bring currency into the shares, and ensure that the next level of growth is well funded. And we have always aspired to bring best of the stakeholders' value, and we'll continue to do that going forward also.
Arvind, morning. Tell me, how is it that you arrived at the valuation of your IPO band? Because compared to some of your peers, the street's seeing your valuations as a bit stretched and expensive.
So I would not really like to talk about the valuation that so much, but I would certainly like to say that the anchor investors have shown huge amount of interest in the company. We have already seen the anchor book getting filled up. We have also seen some big names. Reliance is there, SBI is there, IDFC is there, BlackRock is there, DSP BlackRock is there. Several of the big marquee mutual funds have participated in the anchor investor book, and they've shown huge amount of interest. The value has been determined based on what their interest has been. There's also been a pre-IPO deal just prior to the launch of the IPO. And from our perspective, we would say we would continue to bring value to the investors as and when they show confidence into our company.
Okay, let's talk numbers then. Your revenues have grown at a CAGR of about 9% over the last 4 to 5 years, and margins of close to about 8%, which is quite low compared to your peers like a Minda or a FIAM, etc. How is it that you plan to scale up the sales and profitability going forward?
What you see on our balance sheet or on our financials are blended margins. We do have a sizable amount of business which comes up on a high teen margin business. We do have proprietary business which are typically on a higher margin, but last couple of years, yes, our business were down. That was more on account of the fact that some of our key customers had not been doing well. Honda Cars was down by almost about 30%. Our construction equipment foray, which we made in 2012-13, came down to a standstill and in fact went through a huge amount of downturn with all the mining sector getting shut down, the infrastructure not being moving up. However, from 16-17 onwards, we are seeing a huge amount of traction in all these businesses. Our two-wheeler business has been doing pretty good. We were not there into the scooter segment. We made inroads into the scooter segment, and that's the way in which you would see our H1 numbers have actually translated into a 60% revenue of the full FY17. Our EBITDA is almost about 67% of FY17, and our PAT is about 87% of FY16-17. There has been a margin expansion of almost about 140 basis points since the last fiscal, and we believe that with the traction coming up into the construction equipment business, or the two-wheeler segment with the scooters, motorcycles, all moving into high double-digit growths, and also the fact that we have built up on the operating leverage has started kicking in, the new investments have started throwing up revenue as well as margins, and we are very confident that we would continue to see this growth moving forward.
Okay, Arvind, very quickly we'll close today's discussion with some basic numbers. What will be your interest saving this year after the IPO proceeds are in?
So currently we have almost about 100 crores outflow which is going in terms of debt servicing, which is on the principal as well as on the interest side. This is all getting conserved. Okay. With the IPO proceeds coming in, we are retiring almost about 225 crores plus debt. We are likely to save almost about 25 crores of interest alone with this, and that would help us in terms of ensuring that we fund.
What is the current capacity utilization?
For different businesses, we have different levels.
Blended.
So in terms of our own business, because we are a diversified component player, there's no such thing as capacity utilization. If we have to create capacity in locking systems, we just have to establish a particular line and things start off. The capacity constraints come mainly on account of the fact that if there's a operator cabins manufacturing business, there could be a limitation. However, having said that, we are still operating at just about 50%. We have created another capacity for fabricated parts. So in general, there's no limitation with regard to the capacity utilization.
Okay, you have capacity, but when will demand come?
The demand has already started generating in.
If I add the two-wheeler numbers,
yes,
the sector is not growing at like some 30%.
However, we have still been able to grow the market. If you look at the period of FY11 to FY17, our CAGR, company's CAGR, revenue CAGR was 11%, whereas the auto sector was 6%. Yeah. And that's happened only on account of the fact that we have diversified, we have increased our content per vehicle, we have increased our revenue wallet share with the customer, and we have tried to bring in more high value added products.
What are your receivables? Can you quickly give me that number?
The receivables stand at a very comfortable level. It's just about 20 days.
Okay, it's not like 6 months or something.
No, not at all. We are negative. The Indian operation is actually a negative working capital operation.
Appreciate it. Good luck with the IPO.
Thank you
for
so
joining
much.
us.